Hi, I'm Asif Farouk, Finextra, and we're here with Serge van Dam of Fiserv. Thank you for joining us. So you've produced this research, this white paper, but what makes it different from the white papers you've done in the past?
Well, traditionally at Fiserv, most of our research has been the typical consumer research perspectives, things like focus groups, usability studies, and so on. And we felt it was about time that, given how much we spend on digital channels investments, our product development team for online, mobile and tablet banking is 400 people strong. So we felt, given the investment we make, it was time to go a little bit deeper. So we sent our user experience team into people's homes, and they spent hundreds and hundreds of hours in the house of consumers talking to them about how they see digital channels, how they use their digital devices, how they look at financial services, banking, payments, how they perceive banks. And after hundreds of hours of in-person contact time for our people, we basically took all that data out and turned it into this white paper.
So how have banks traditionally segmented their customers, and how is digital shaping the way they do that segmentation?
So banks have traditionally segmented their customers on demographics and financial metrics, so things like assets, spending, debt, and also the segmentation stuff has been based on, as I said, the demographics, how old they are, gender and so on. But that really bears no resemblance to how they use digital channels. So what we found in the study is that the biggest or the best predictors of how consumers approach digital channels was really two key parameters. One was perceived levels of debt, and the second one being financial literacy. And so the traditional segmentation model really gives you no predictive ability on how consumers want to or will use digital banking technology. And our view is that digital is something that banks want to make universal amongst their customer base because it leads to higher engagement, better levels of retention, and of course higher profitability. And so if you want to drive up digital banking and make digital banking universal, then banks need to segment their customer base in new ways. And we feel that perceived levels of debt, which is not an easy thing to measure, and nor is financial literacy, is a good way to go.
Is there such thing as digital banking, or do you think that's changing in the wake of new digital devices?
So yes, digital banking exists. But again, traditionally, financial institutions have looked at traditional channels like branches and contact center, and then digital banking. And what we found in this research is that the notion of digital banking that's not the way that consumers look at it. They look at the way at their devices and say, well, I'm using my mobile phone, I'm using my tablet, I'm using online. And so digital banking doesn't really translate very well for consumers. And the key thing about the way that consumers look at it is what we call the tailored experience, i.e. consumers want the experience to be specific to the digital channel they're using, whether it be mobile, in which case they're really focused on a spontaneous, quick and efficient experience, right? Whether it be tablet, in which case it's much more about leaning back, having a relaxed tone, having a relaxed posture taking time, or the computer or the PC, which is much more about doing work and doing more complex financial transactions. And one of the key findings out of this research was not so much the device size or the capabilities of the device, but the fact that consumers brought specific emotional attributes to those digital devices. So for the PC, as I said, it was much more of a lean-in experience. It's seen like work. So that's one of the reasons consumers are migrating away from PCs for digital banking. The tablet was seen much more about a lean-back, relaxed social experience. It's something that's in the home. You do it sitting on your couch. You sometimes share it with your wife or so on. And of course, on the mobile side, it was very much about spontaneity and immediacy and speed. And that was really, really key, is that the emotions it wasn't just that the consumers were using the devices differently, but also that the emotions that they brought to those device experiences was different. And that's really new to us at Fiserv, and it's new to banks who have not traditionally thought about the emotional experience of a consumer.